Breaking right now, Iran has just unleashed a deadly missile barrage at the heart of Israel. Cluster bombs are raining down on Tel Aviv. 2 people are already confirmed dead, and the world is holding its breath. This is revenge. Cold, calculated, and devastating revenge. Stay with me. The implications are absolutely huge. Iran fired multiple missiles armed with cluster warheads directly at central Israel overnight. The deadly strike hit the Ramat Gan area, just outside Tel Aviv. According to Israeli police and emergency services, a residential building took a direct hit from a cluster bomb. 2 civilians were killed in the strike. Reports confirm they were a couple in their 70s. 5 others were lightly injured. Iran's state television claims this attack was direct retaliation. Retaliation for the assassination of Ali Larijani, the head of Iran's Supreme National Security Council, one of the most senior security officials in the entire Iranian regime, killed in an airstrike attributed to Israel just hours earlier. Now here's the key point. Cluster munitions are among the most controversial weapons on the planet. They explode in midair, scattering dozens of smaller bomblets across a wide area. CNN cameras captured what appeared to be cluster munitions breaking apart in the skies above central Israel. You can see it in the footage circulating right now. A single missile, splitting into fragments, raining destruction across an entire neighborhood. According to Israeli police spokesman Dean Elsdon, the initial assessment confirms cluster bomb impact in Ramat Gan. But here is the bigger picture. This does not happen in a vacuum. This is part of the biggest Middle East war in modern memory. The 2026 Iran conflict began on February 28th, when the United States and Israel launched coordinated joint strikes deep inside Iran. According to multiple reports, those strikes killed Supreme Leader Ali Khamenei and dozens of senior Iranian military figures. Iran has been firing back ever since, every single day. And this latest barrage, targeting densely populated Tel Aviv, is a brutal escalation in that ongoing cycle. According to analysts at the ACLED Research Center, Iran's missile launches are actually lower in volume than during the 2025 12-day war, because joint U.S.-Israeli efforts have reportedly destroyed up to 3/4 of Iranian missile launchers. But lower volume does not mean lower danger. Iran is now using multiple warhead missiles, specifically designed to better evade Israeli air defenses. More sophisticated, more lethal per launch. And this is where things change. According to Reuters, Israel is now preparing a second phase of the war. The target? Iran's underground missile storage sites. Deep bunkers, hardened facilities, subterranean stockpiles. Israeli military estimates suggest Iran had around 2,500 missiles before the war began. Other analysts put that number as high as 6,000. The question now is how many are left? And more importantly, how many more can Tehran fire at Israeli cities before those bunkers are gone? Just in, Iranian officials are now publicly vowing further retaliation. Iran's Amir Hatami says, and I quote, "Iran's response to the assassination is not yet complete." According to DW and multiple regional outlets, Iran is threatening a decisive follow-up strike. Could this be the moment the entire region catches fire? What if multiple missile fronts open simultaneously? What if Hezbollah in Lebanon fully re-enters the fight? According to critical threat analysts, Iranian-backed Iraqi militias are already threatening to expand attacks to regional countries hosting U.S. troops: Jordan, Saudi Arabia, the Gulf states. We are looking at a potential chain reaction, with consequences for every single financial market on Earth. Now, let's talk about your money. Because the markets are absolutely screaming right now. Oil. According to Reuters, crude oil prices have already surged more than 70% since the war began on February 28th. Brent crude has been trading above $105 per barrel. WTI is pushing toward $100. Just this morning, according to Yahoo Finance, U.S. WTI futures jumped another 5% after Israeli strikes targeted Iranian gas fields. According to Al Jazeera's analysis, oil prices have surged roughly 50% since the very first U.S.-Israeli strike hit Iranian soil. The Gulf region contributes approximately 20% of global oil production. Most of it moves through one bottleneck, the Strait of Hormuz, 21 nautical miles at its narrowest point, the most important 21 miles of water in the global economy. But something important happens here. According to Goldman Sachs, this is a real oil shock, a supply shock unlike anything since the Russia-Ukraine war in 2022. The bank reports that oil production from Kuwait, Iraq, Saudi Arabia, and the UAE has collectively dropped by at least 10 million barrels per day as of mid-March. According to economists, that is the largest supply disruption in the history of the global oil market. Read that again, the largest in history. And analysts at CNBC are warning, the sky is the limit for oil prices if the Strait of Hormuz is disrupted. Some analysts suggest prices could surge far beyond $120 if Iran makes any move to close or mine that critical waterway. What does that mean for you? It means gasoline prices in the United States are going to keep rising. It means global inflation, which central banks claim to have defeated, is now making a violent comeback. The Federal Reserve is completely trapped. They cannot cut interest rates into an oil-driven inflation spike. But they cannot raise rates into a slowing economy either. According to economists, this is the definition of stagflation: rising prices, slowing growth. Nowhere to hide in traditional assets, so where is the smart money going? Gold is holding strong. According to CNBC and Kitco data, spot gold is currently trading near $5,384 per ounce. At the peak of the initial panic, gold briefly touched $5,418. David Mager at High Ridge Futures says, and I quote, "It is the uncertainty that is bolstering prices. Safe haven demand is absolutely real. But here is the most surprising story in the markets right now: Bitcoin. According to Fortune, Bitcoin has actually outperformed gold and stocks since the start of the Iran war. Since February 28th, Bitcoin is up approximately 7%. Gold has stayed virtually flat during the same period. The S&P 500 is down about 1%. According to Binance data, Bitcoin was trading near $71,000 as of this week. Now here is what is fascinating about that number. When the first strikes on Iran were reported on February 28th, according to Forbes, Bitcoin plunged immediately towards $60,000, a near 5% drop in minutes, pure fear selling. But then something happened. Reports spread that Supreme Leader Khamenei had been killed in the strikes, and traders, interpreting that as potential war de-escalation, rushed back into Bitcoin. It recovered above $68,000 within hours. Could this be the moment Bitcoin cements its status as a geopolitical hedge? Analysts suggest we are witnessing something genuinely new: a digital asset behaving as a sovereign safe haven outside the reach of any government, outside the range of any missile, immune to sanctions, immune to capital controls. And in a world where buildings are being hit by cluster bombs and oil is surging past $100, that property is becoming extremely valuable. Let's zoom out for a moment, because the financial picture here is bigger than any single market move. According to Bloomberg and multiple macroeconomic analysts, the US dollar is surging against virtually all other currencies. When the world panics, it buys dollars. But how long can that dynamic hold? If this war forces the US government to dramatically increase military spending, and if oil inflation forces consumer spending to collapse, the pressure on the US Federal Reserve becomes truly historic. But something important happens here. Goldman Sachs analysts suggest the supply chain disruptions, while severe, may not reach pandemic-level chaos. They see a modest GDP hit for the United States, limited risk of broad manufacturing shutdowns. But they are clear: the oil price trajectory remains highly dependent on what happens in the next 48 to 72 hours. Every Iranian missile fired at Tel Aviv, every Israeli strike on an Iranian bunker, every threat from a Gulf proxy militia moves global energy markets in real time. Just in, according to Israeli media and the Jerusalem Post, Mayor of Ramat Gan Carmel Shama HaKohen says, and I quote, A tough night for Ramat Gan. We are being hit with barrages. Israel's National Railway has suspended operations at a major Tel Aviv station due to shrapnel damage from the barrage. Air raid sirens sounded across both Tel Aviv and Jerusalem last night. The Israeli military has confirmed it identified multiple missiles fired from Iranian territory. According to police, the barrage hit several locations across central Israel. Now, here is the critical question every investor needs to ask right now. What if this escalates further? What if the next barrage is 3 times the size? What if Iran's remaining missile stockpile, which analysts estimate could still number in the hundreds, is aimed not just at Tel Aviv, but at oil infrastructure across the entire Persian Gulf? What if the Strait of Hormuz is disrupted for even a single week? According to energy economists, a full closure of the strait, even temporarily, could trigger a global energy crisis unlike anything we have experienced since the 1970s. That is not hyperbole. That is the realistic tail risk that smart money is now pricing in. So, what does all of this mean for the average American watching at home? It means your gas bill is going up. Your grocery bill is going up. Your investment portfolio is under pressure. According to multiple analysts, this is the moment to think defensively. Hard assets, energy exposure, defensive equities. And for those who believe in the digital asset thesis, Bitcoin continues to demonstrate remarkable resilience. Analysts suggest the key level to watch is whether Bitcoin can hold above $68,000. As successive waves of geopolitical news continue to hit the markets, and this is where things change, because we are not watching a normal news cycle anymore. We are watching the live dismantling of a regional order that has shaped global energy markets for 50 years. The 2026 Iran war is the biggest geopolitical shock since the Gulf War of 1991. And unlike 1991, this time the weapons are smarter, the missiles are faster, the financial systems are more interconnected, and the global debt levels are at historic highs. There is no easy exit from this situation. According to ACLED's strategic analysis, even if hostilities subside in the coming weeks, any surviving Iranian leadership will move immediately to rebuild its military capabilities. The only way to truly end this conflict, according to some analysts, is regime change in Iran. And that is a far longer, far costlier, and far more destabilizing undertaking than any limited air campaign can achieve. In other words, this is not ending soon. According to DW and regional intelligence sources, Iran is vowing its response is not yet complete. 2 people have been killed in Ramat Gan tonight. Cluster bombs have fallen on civilian neighborhoods near Tel Aviv. Oil is above $100. Gold is above $5,300. Bitcoin is holding near $71,000. And the war is entering its 3rd week with no ceasefire in sight. Stay alert. Watch the Strait of Hormuz. Watch Bitcoin's key support levels. Watch what Washington says next, because the dollar endgame is playing out right now. And we will be tracking every single development as it happens.